is doing okay with their earnings reports. Nvidia traded up near the high of the move. Not only will it lift the other semis, will it lift this market? We got a quiet rally going, but got a nice area of resistance to talk about. Some other earnings, Etsy after the short report, we'll see, or kind of a short report from Andrew Left. We'll talk about Etsy. Baba. Baba comes alive. China, can that ignite the market a little bit too? Catalyst coming out of their earnings as well. We got some economic data at 8:30. Not huge economic data, but be interesting to see what that GDP is. And then Tracy Roniak, Sachs Research. She's going to join us at 8:35 to talk earnings. We got a special host today. He's going to get things started. I'll let you guys guess who that is. Let's get it going.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. We got some green on the screen. We're up 20 handles, knocking on the door of yesterday's high. This has been a sustained rally up here in the S&Ps, but certainly not a blast-off rally that we'll be seeing back in January. The buck is down 10 cents. That hurt the market a little bit yesterday. That's a 104.41. Bond's down almost a half a point, 124 and 5/32. Crude rebounding after yesterday's bashing. Do we have a double bottom in crude? Up 68 cents at 74.63. Gold in the red by 770, trying to hold on to the low of the move. Silver going the same way, down almost 11 cents at 21.57. Bitcoin kind of sleepy. That has a pair of lows, perhaps a double bottom on the futures. That's up $150, 24,140. Let's bring in Triple D. Triple D, good morning to you. And what's the words? How do I want to do this? Is like a stubborn rally. I mean, we're up. We made a nice move in the last 10 minutes of the session, right? Nvidia gives us good numbers, and now we're just hanging. What are you seeing out there?
I'm seeing tech rally. Obviously, it got helped a little bit with Palo Alto yesterday. Tech actually didn't have that bad a day. There was some pockets that had a bad day, but there was some pockets of growth stocks. I know ARKK actually closed in the green yesterday. So you're seeing that continued tech. Again, I'm going to keep saying the same thing. I feel like we're just in a trading range here. We're kind of trying to find some support here around the 4,000. Nvidia definitely helped out. But let's, you look at the report and we've come down a little bit. These numbers didn't blow it away in Nvidia. They were good enough. So you start to get into the same thing, complacency here, where you get the stocks are coming down. Okay, well, now it's good enough and we'll rally it back up to where it was just a couple of days ago. So I think you just got to keep trading the ranges here. Keep trading the chop. Don't chase moves, and I think you'll be okay.
All right, let's bring in Aaron Bree, sitting in for Mitch Hoch today in the world headquarters. Young Aaron, how you doing today?
I am good, Mr. Elconin. How are you doing?
We're doing good. We're doing good. So why don't you just lay those NVIDIA numbers on us? We'll look at the technicals, and then we'll look how the other semis are trading.
Yeah, let's do it. I got to pull them up real quick. I was looking at Baba's, which also reported this morning. I know we'll get to that in a little bit. Also, a lot of upgrades coming from Nvidia after the numbers came out.
Of course.
Thank you.
Yeah,
very much.
It's so funny, right? As soon as the company reports a good quarter, it goes up 10%. Then you see, I'm looking at it right now. It's Oppenheimer, JP Morgan, it maintains overweight, all coming in
Lemmings.
After the fact. So Nvidia's Q1 revenue was $6.5 billion versus $6.33. So like Dennis said, just a slight beat. And a lot of the buzz that everyone's talking about right now with, the stock up now, 8-10%. People are talking about NVIDIA's AI licensing business about to come out. And to me, it's more of what we've seen the past month, really, since ChatGPT's come out. It's like these stocks are really running on this AI news. To me, I think you take the AI component out of it. The stock with Nvidia is still up today, but I don't know if it's up 10%. It seems like that's what a lot of people are real jazzed about right now.
I mean, they just want an excuse to buy this stock, and we can look, at the multiple, and it's insane what they're paying for this multiple. But they've always paid a higher multiple for Nvidia. There, it was probably insane to get down to a multiple of 26 or 27 when this thing got down to about $108. So again, we're just not in this market where it's paying to chase moves. Look at Baidu yesterday. If you just want to, look at what is back, and they didn't all. Palo Alto held up. But Baidu immediately giving it all back. I mean, it opened at the high tick and then closed red on the day. So, there is pockets, and again, we can go and look, what happened with Walmart. It gave a lot of it back after, having a nice run. Deere is starting to leak a little bit here after popping up here. It's not always on the first day, but it seems like that eventually they start to leak here again. We're just in this market where you take the gains when you got them and the market takes them for you. I got to keep sticking with that theme.
Yeah, I would just say I'm just going. Dennis loves one number and one number only, and that is 230. I mean, look at that. We knocked on the door 3-4 times earlier in the month. The pre-market, it's just been a sustained bid in the stock, really, after hours, also at the 4 a.m. open. So I just would use that as your swing number. That's a good target for me on the upside. It's a huge number. Just traders out there, you blow through 230, you go 231, 231 and a half, maybe 232. Be careful if it comes back down to that.
This is what do they do?
Yep.
And nothing is guaranteed in the stock market, but when it comes this high, you almost think they want to go up there and make a new high tick just to bring people in. They rarely just go on the earnings and they go right to that price. Right off the hop, they can. But once you get, and the stocks trade up here for a bit, and obviously we've traded up here for a lot of hours now, the entire pre-market session, most of the after-hour session, you almost think that they're going to want to make a new high here, 231, 232, ticket, bring some people in. Oh, here's the breakout. Let's buy the breakout. And that's not working and been working for the last year and a half. And then, eventually they bring it back in. And maybe it goes 235. Maybe it goes 236. I think eventually you're going to get another shot here. I just don't think we're in this environment where we have to chase price. The analysts obviously disagree with me because they're all chasing price here this morning.
Yeah, I see Jaeger in the chat saying the entire NVIDIA call, AI.
Oh, buzzing.
I didn't listen to the call, but you got to think like behind the scenes, like they're like, oh, well, everyone's talking about AI. Why don't we just do that? Why don't we just talk about our AI business? But I do think, in terms of, I know you guys have talked a lot about different AI stocks here on the show before, but you see a lot of these like smaller AI stocks that were running. C3 AI has been around for a while, but I really do think there's a potential that the best way to get exposure to AI is through some of these bigger companies already, Nvidia, obviously Microsoft now. So it'll be interesting.
Sure.
It'll be interesting to see, some of those smaller AI companies that kind of, pop up, who's able to stick around out of them. But for the most part, right, it'd be hard for me to imagine that Nvidia, Microsoft, Google, whatever, are going to let some of these like smaller guys catch up to them in AI. It's just way too big of an opportunity.
I said it yesterday. I like Microsoft at the 250 level. We actually bounced right there at 250.34, Joel. We almost got right to tick on 250. We're coming out of here now a little bit with the Nvidia call. Obviously, it's helping Microsoft here as well. So I think you got a number there on Microsoft. I think it's 250. Again, it's not going in the long-term portfolio because I don't like the 26 valuation. But from a trading perspective, I kind of like it here off the 250. I have no position in it, but I like it here just at that 250 level. And I like the thought process of what you're talking about, Aaron, is, here we are. You have that whole big run-up on the chat GPT, and then in 4 days, you give it all back. You've come to where you broke out from. So it's almost like you're getting the chat GPT for free from a trading perspective here, because this is where it was before we even started talking about chat GPT.
Yeah, that's traded up 68 cents. Just real quick, AMD, let's just look at the Sympathy plays out there. AMD up $3 on this. Real quickly, I'd give you a target on this one. Oh, wow, we got up to 89 in AMD. And then yesterday, didn't quite fill the gap. 89 to 76. That's 13 when I went to school. 6.5. That takes you up to, got a ways to go. 82.5, 83. Maybe not today, but your next daily high to contend with is 79.65. Wow, you're right into your 3-day high. After that, things open up. Micron is trading. That's trading up $1.56. That has to repay some of its move. AVGO, bad day yesterday, getting a boost off it as well today. But I saw a new one today, Dennis. I saw
What's
a new
that?
AI stock.
What do you got?
LUNR. How did we miss this? Intuitive Machines. Is that the greatest name ever? Look at this thing.
Well, obviously this has been having to move for 4 or 5 days. So was this a SPAC?
I don't
Wait,
know.
it went up 100% yesterday, Dennis? Or
Well, I'm looking at it 10, 10, 10, and I saw this thing hitting the filter, but I didn't bother to look at it because I don't know the ticker symbol. Was this a SPAC? In the chat, tell me if this was a SPAC.
it looks like
whenever you
it.
see them all trading at $10, it looks to me like it was a SPAC. Yep, Zoltan. Thank you, Zoltan.
Yeah,
saying yes, it was a SPAC. Obviously, let's look to the because I haven't been following this story whatsoever, and I don't look at SPACs anymore because usually they don't move. But in this case, obviously, it must have had some deal with some AI company, and the buzz, you can't stop the buzz. So let's go look at the day it broke out here, Aaron. If we go back to February 15th, I'm going into the Pro right now, trusty Benzinga Pro. Let's go see what they were doing here. Well, this a statement, which I'm not going to read. It looks like they must have announced some type of a deal or something here.
Yeah, it went from
I see on Wednesday.
You got to read the statement. We got to
Yeah.
jump in. Joel threw us under the bus on this one, going right off the grid here, so we didn't do any research on this ahead of time.
It just popped up. That day it went from 12.74 to 44.77.
I think that was Thursday the 16th. Intuitive Machines, LUNR stock skyrockets following SPAC merger. So it seems like the deal was, or that the actual merger was finalized or announced last Thursday, and the stock went up 160%. But it looks like it's running still. I mean, it's up pre-market again, another 14% up to 94. I don't know about you guys. Because you guys are more the traders, and I do want to say, like when I talk about when I was talking about the AI stocks and stuff, like I tend to have a more long-term perspective. I'm only 25 right now. I'm just adding stuff that I like in my long-term portfolio. But from a trading perspective, like I wouldn't chase this up here. I mean, I wouldn't. And I sure as hell wouldn't add it to my long-term portfolios at $100. So I don't know what I would do with it.
You wouldn't do anything with it. And this is why when I see this stuff, I just ignore it because one, it's gambling because you don't know where these things are going to go. I guess if you pick it up at 10 and it's going to 10:30 and you think it's going to go from that point in time, but almost always, nothing is 100%. But I'm going to say in the majority of cases here, when these SPACs go from 10 to 100, eventually when you look back at them 6 months from now, they've leaked away most of those gains. So chasing here is a very good way to lose money. Now, again, I don't short these things because who the hell knows?
It's another way to lose money.
You could go at 20 and you're like, well, this is stupid. And you're shorting at 20 and now you're looking at 80 and you're just getting destroyed. So this type of stuff, you just got to stay away from. Obviously, it's disconnected from all fundamentals, just trades on hype. And you have these storied stocks. These have always existed. I mean, Reddit and social media takes a lot of credit for all this. But even back in our day, Joel, there was always some storied stock. What was the rumor mill back in the day? Before we go, so let's just stop and forget. Social media didn't exist back in Joel's early days.
I know what
it didn't exist in my days either. I started in 1999. Joel started back in 86. So what was the rumor mill that would make these little small caps or smaller stocks just skyrocket back then? Where did we get them from?
Email newsletters.
Well, that was in the 90s. But Joel's going to go before that. So you're exactly right, Aaron. It was email newsletters. I can remember
that's old. That's a long time ago.
That's been going on for a long time. The Sunday night newsletter.
Sunday night newsletter. Who wrote that?
No. I mean, I don't know if that was the exact name, but I mean, that was the time to put. A lot of them would come out, and that would be the time, right? Because the people, or you send it out Friday night, and then people think about it the entire weekend. But no, I mean, I think the newsletters. I mean, before that, I mean, just the good old fashioned, insiders and the boys. But anyways, I just going back. I'm sorry about that tangent on
one more. I want to go on the tangent again because it's just fun. Who was that trader in the Bright office that subscribed to all these newsletters? It sat like when I started in 1999. There was this trader, and he came from the floor. And he subscribed, Aaron, to all these email newsletters. And what he would do, and he was really good at it, he'd get to his desk really early before everybody else, and he's trying to buy these things in the pre-market to try. And again, now the algos are all over that, but back then there was no algos. There were very few algos. So he'd be in the pre-market trying to buy all these up because he knew at 9:30 when the majority of market participants, because a lot of retail couldn't trade pre-market then, that they would pop up. And he'd make like $10,000 a lot of mornings just getting ahead on these newsletter trades. And again, you can't do it now because the algos are all over it. But what was his name?
Where did he sit?
Don't say his last name.
Some people in the chat are saying Barron's. They would get good recalls from. But I just want to say, I mean, Dennis, you're saying like you can't say anything's 100%. I feel very confident, right? This lunar stock's going to come down a lot. I just don't know.
Yes.
I just don't know if it's going to be right now at 100, at 120, at 150, and I don't really feel like trying to guess that right now. So I'm fine just kind of going hands off on it. Sorry, Joel, what were you going to say?
Dennis, where did he sit? Do you remember where he sat?
I sat in the very corner. You put me in the corner because I was the punk kid and you didn't like me very much. And then Radar sat beside me.
Yep.
Radar sat beside me, and then we had another guy who just traded Amazon. And this is fun to like get you a feel for the bright trading office in Detroit. The other guy just traded Amazon. It's Todd, I think. Todd. And he was a fabulous Amazon trader. Amazon, you think things are volatile now. Back in like 1999 and 2000, Amazon would move around 20% a day. And he would just sit there and he'd be taking heat. He'd be down 5, 6, 10% this, and then would just come back in the afternoon and Todd would just make money. And then there was the next guy, Donnie. Was it Donnie?
Yeah, actually,
Donnie, I don't remember his last name, but he killed it on those newsletters. See, everybody had their little niche. Like I was trading filters and looking for big bids and doing tape reading. Radar was chasing everything. And then there was Todd, who was just trading Amazon. And then Donnie was a newsletter guy, and he tried to subscribe to these newsletters, and he tried to get them as quickly as he possibly could because he knew the retail mob would come in at 9:30 and pop all these things up. And he did really good with that. So. Yeah,
I was talking to one of my oldie buddies yesterday, and I got Donnie's number. So I don't know if I could get him.
He's an excellent trader.
Yeah.
He came from the floor, didn't he?
He came from Oldie. Yeah.
Oh, he's oldie too.
Yeah, one of the oldie traders.
Oldie market maker.
Yeah, one of the market makers. But okay, so let's move on from that tangent. Our first tangent with Aaron. Get used to it.
So Joel, I know we're about to get into BABA and China stocks, right? Is that where we're going?
BABA, yep.
Okay, but before I was gonna see if I have permission to take us on a 1 minute thing real quick, just because I saw something in the chat and I'm curious your guys' opinion because you guys are way better at looking at the charts than I am. Can we pull up the UNG? Someone was talking about natty gas, and the chart to me is just crazy right now. I want to spend 60 seconds on this before we get to BABA.
I mean, everyone's been trying to pick a bottom in this. The Ukrainian war, this was supposed to go to $50. It hasn't.
Murdered.
I mean, I long term for me, I would not buy natty gas UNG until I had a green candle on a monthly.
You can't buy this long term though, and that's the other thing too is you can't stick these vehicles in your long term portfolios because the rolls, because they're always rolling over, just kill you. And if you look long term, they just continue to leak lower. So these are tough long term vehicles. If you want to be long natural gas, you got to be long the natural gas producers. You got to be long, the companies that are out there. Not the actual UNG. UNG is a trading vehicle. You stick this in your long-term portfolio, you are bound to lose. I mean, there's periods of time where it goes up for sure. But you got a 10-year time horizon, you're sticking UNG, you're probably going to lose because it's a simple cost to carry in this thing. So, it continues to roll. They buy the next month, and they're always selling the front month because they don't want to take, physical possession. And they're always doing that roll, and that roll costs money. There's cost of carry costs here. Same thing with the USO. It's the same thing. These are good trading vehicles, but long term they tend to deteriorate just because of that roll. Show that chart again on the USO. Show that chart again because people don't realize.
This is the USO.
Yeah, what's the high?
Oh man, over 900 almost.
So you think about it. Oil is not that far, 50% off all-time highs. I think we're at to 147. But here you have the vehicle, and this just shows you how much you lose over the course of time owning a vehicle like this. You don't want to own vehicles. These are trading vehicles. They're fine for trading. I trade it all the time. Short-term trading, they're good hedges. You can do whatever you want with them. But long-term, you should not be investing in these things because long-term they continue to leak. Put UNG back up there because we're teaching something here right now. Because a lot of people,
I'm learning a lot. I hope people.
Look at
Oh, look
the
at the UNG.
What's the all-time
2000,
high on
Dennis.
that thing? Or what's the high from? No, maybe not even all-time high. What is that? 2009, 2010?
Yeah.
What's
Oh,
the
it was
high?
2044.
$2,000. Now it's $7. You see, even though natural gas probably over that time frame is not nearly down that much, the continue rolls, the way these are structured, continue to leak out leak out that little bit of premium you're always paying. They're buying the next month and they're selling the front month, and they continue to do that. And that structure continues to cost money. It's cost of carry is what it is, not long-term investing vehicles. So again, now continue to your technicals, because I'm just saying don't put them in their long-term portfolio. They're not good ideas.
He's saying it looks worse than an altcoin crypto chart. But all right, thank you guys for taking a look at that real quick. I know that was off topic, but let's go ahead and transition into some of these Chinese stocks.
Sure.
BABA trading higher this morning after the company reported better than expected earnings. Let's go through some of those numbers and see what the chart's looking like. EPS smashed, came in at 2.79 adjusted versus the 237 estimate. Sales at 35.9 billion versus 35.7 billion. So slight beat on the sales, but that strong EPS beat. Stock trading up, of course, about 6% this morning, above $100. I mean, this thing was what this thing get down to $60 a couple months ago in October?
No, it got into the 50s, didn't it?
Into the 50s.
That's like almost an all-time low. They've grown the earnings like crazy, and the stock almost hit an all-time low when China was basically uninvestable. And I'm still not sure with the geopolitical risk if I want to invest in China. But I'll tell you, the forward PE on Alibaba right now is 10. I mean, if you think it's safe to invest in China, this is a nice pullback here. Now, again, it's up $6. It would have been good to talk about it yesterday ahead of the rally, but 120 down to 100. I mean, the 90 area would have been nice, but now you're rallying up. But on dips here, if you think China's investable, and I have very little money in China now because I'm really still concerned about the geopolitical risk. I wouldn't want them if they're ever do invade Taiwan. Then all of a sudden they're going to be like, the Russian situation going on here. And, you saw what happened with those markets. So I'm scared to invest in China for those reasons. But I will tell you that this stock is dirt cheap from a PE multiple. So if you think that, we're going to repair our relations with China from a geopolitical perspective, then the stock is cheap.
If you don't mind, Dennis, me just kind of playing devil's advocate there, and kind of why I would be okay with investing in China. As far as I know, China is still our biggest business partner in terms of other countries between the U.S. and China. Any type of, you're saying we're going to rebuild. I mean, that business relationship hasn't deteriorated. Some things may have, there might be some more kind of like squabbling going on. But in terms of our business relationship, that hasn't changed. And if that does, if we pull out all manufacturing, whatever, or we stop bringing stuff in from China, we stop manufacturing there, like that would have a significant impact on our economy as well, a negative impact, at least in the short term. I know a lot of people, we are bringing more production back because COVID kind of exposed that having basically all of our production, especially for like medical stuff, is actually a big national security issue to be that reliant on outside supply chains. But I still think like something drastic would have to change. And if we've been doing business, if China's been our biggest business partner for the past 30 years, I'm not in the camp that I think that's going to go ahead and I'm going to wake up and that's going to change tomorrow. I mean, I know the Taiwan thing is the biggest risk, but even that, I don't see that happening like anytime soon, just because I think even China knows that could really be the catalyst for like, Russia, Ukraine. It was a big deal, and people talked about that maybe being the start of like a bigger war. But I think China, Taiwan could potentially be an even bigger deal than that. So I just don't like if there's like this huge big thing that could happen to change everything or just stay the same. I'm more in the camp that I think things will stay the same rather than some huge change happening in the next like year or two.
Yeah, and if I believe that fully, I would be in Alibaba here right now. And I don't know which way this is going to go. I just, for me, and especially in my long-term portfolio, I always analyze risk reward. And I look here and I'm like, this is, nice reward. I mean, the stock is cheap. I just can't get by that geopolitical risk. I just can't get by that our tensions with China have not improved over the course of the last year. It's probably deteriorated. from a geopolitical perspective. If you take out the geopolitical stuff and throw that out the window and say it's just like you're saying, Aaron, we're just going to continue with business as usual, Alibaba is a screaming buy. If you could take that out, and again, I don't chase, I don't buy stocks when they're up 6%, but you get a pullback here. Baidu pulled back yesterday. But a lot of these China stocks, if you take out and just eliminate the geopolitical situation, I think they're all screaming buys. The problem is the geopolitical situation is real. The problem is it is a risk. And that's why I just can't quantify that. I don't know how to quantify it. And I'm a quant at best, really. I trade and invest quantitatively. I can't quantify it, so I just stay away. But I think you have a lot of people staying away, and a lot of people are staying away. And, it would have been nice going these things in October or November. I mean, it's been the correct play. I had Alibaba in my long-term portfolio for 7 years. For 7 years. I had bought it originally at around 120. I sold a piece around 200s, and then I sold the rest of it around 230, I think, because I was worried about specifically Alibaba with obviously what was going on with Jack Ma. But, the second thing is, there was geopolitical tensions that were already growing back then. I took a lot of heat when I sold that stock. People were like, man, why are you selling Alibaba 230, 240? I'm like, I get it. The P's fairly cheap here now, but I just can't quantify all these other risks. I'm glad I did. It's down here at $100 here now. But now looking at it here, I mean, there's the potential for a lot of profits here if you can eliminate that geopolitical risk.
Yeah, which is going to be nearly impossible to do. Nearly impossible.
Well, if you said, okay, like with all the numbers, PE, BABA should be trading at, I don't know, just throw out a number, say like 200, and it's at 94 right now. You can say, okay, these geopolitical risks are being priced in.
Oh, totally.
Basically 50% from where it would be trading at. But Sam King throw a comment in the chat basically saying, which China stocks would get hit harder in this situation, but kind of the way I look at it too is it's like if I had all U.S. equities, right, Amazon, Meta, whatever, and we go to war with China, those stocks are getting hit too. So from a risk reward perspective, and these China names are beaten down with that geopolitical risk already baked in, you're still exposed to that geopolitical risk from other. I mean, unless it's really just if it's just China and Taiwan and we're not involved. So obviously the Chinese stocks would get hit way harder in that situation. Yeah. But I do think, right, bad news for our economy, bad news for our equities as well, if there is some big fallout with China, which is why I don't see it as some huge possibility next year.
I mean, if we go to a war
wrong.
with
Hey, Dennis, 828.
Yeah, I'm going to go
It's
wide.
828. We got GDP coming up. We also have jobless claims coming. Those are not the biggest numbers. 2 numbers on BABA. I'd be a buyer at 90. That's half of the rally that you had. And
good level.
Yep. And then 120. I mean, I can't really stick a good number out there. That 120 is major. That's major on the monthlies. But we got some numbers coming up. We're knocking on the door of yesterday's high. And this is, this is where the bulls can assert some control. Your pre-market high stands at 23.50. Wednesday's high was 25. Nvidia over 30 has given us the boost here. So that's what I'd be looking for. I would absolutely not want to be short this market if we take out Wednesday's high at 225. Aaron, you got the number? You got any preview numbers, or are we just going to go off the price action?
We're going to go off the numbers. So the forecast for initial jobless claims is 197,000. That would be a 3,000 increase. It was 194,000 last week. So we want to see, I mean, from a market perspective, I think we want to see the jobless claims go higher because people will be like, oh, that means the Fed will have to cut. And then of course for the GDP, the estimate is 2.9% for the Q4. I mean, that's a huge quarter, right?
I think dips get bought, is what I'll say before it. If we get a significant dip, I think it gets bought.
Okay. All right. And that would be, I got your dip buying area of, if you're brave on a quick spike, 14.25. Let's see if we get there. We're bouncing around. The algos are keeping a pretty tight range. You did have a spike up to 24.50, and I mentioned that 25 number, folks. And that so far in the first attempt, it was turned back at yesterday's high, but there's still a bid here. Bids are weakening. Bids are falling. We're going to look at mid-range on the session here at 14.25. We could be there momentarily. Trading 15. So right now, that initial pop is running into problems at yesterday's high. We're back halfway range on the session. So give us the numbers.
Let's see. We got to go to our trusty Benzinga Pro.
Well, GDP
Very
I'm
trusty.
seeing here, 2.7 versus
Ooh.
2.9.
Wow, and 3.2% prior. So that's 0.5% lower than the previous quarter. But you would think people would like that. Say, okay, the economy is slowing down. That's good. That means inflation should dry. I don't know. I don't know what people want or see. Jobless claims came in 192. I'm seeing on Pro the 200,000 was the estimate. So that came in lower than expected. So you kind of have the jobless claims showing good, strong economy, GDP lower than expected. So you can see those
Wow.
algos kind of battling it out there. Wow. I mean, all right. Dennis said he thinks dips are going to get bought. We'll see because it looks like we're dipping pretty hard here.
Yeah, yeah. As I mentioned, you just missed yesterday's high, so keep an eye on that, folks. Moving forward with potential double top right now. Trying now holding here mid range on the session. We did get a little bit 40-12. So right now, very orderly market here from what I could see. I mean, you got the pop, it was sold, and you got a dip. And right now, there's bids out here. If we lose this mid range on the session, I don't think that would be good. I think you'd have to wait until your closing price of 99 and a quarter. We haven't seen that yet in the pre-market. The pre-market low comes in at 4,005. So right now, the Bears are a little bit in control here with the lower GDP reading and the hot jobless claims number here. So that's what we got. We got resistance. Resistance is resistance until it's taken out. I don't know if we're going to get triple D back here. No, we've already had our CPI number.
Yeah, I'm looking at buying the dip here actually. So
Okay.
I'm trying
Looking
just
at
on
buying the
indices.
dip right there. You want right at that 4 is 4,000. Could that be a psychological level for the S&P?
Yeah,
right
I
here
think so. I just think with the Nvidia news and stuff, I don't think this GDP is enough to take us red. So I just think it's another opportunity. So I'm trying here.
Well, and
I
I
bought a
think
little bit. I've been buying a little bit of I've been buying a little bit of IWM actually, but
I think too, like zooming out a little bit and keeping in mind like where we are in the market. A few months ago when SPY was at, I don't know, 350 or whatever, right? Everyone and their mom was talking about, this big recession that was coming. It wasn't even a question of if we were going to get a recession. It was just how long is it going to last? How bad is it going to be? Right? Every single bank, whatever, we're saying we were going to have this recession. We kept getting these good economic numbers and people basically saying, wow, how is the economy holding up despite the fact that we're racking up interest rates? So then the market started coming back. Hey, maybe we're going to avoid this recession. And now we're going back down again. And I don't know why. Like, I understand we got probably too extended too quickly. But, okay, so now the Fed's going to have to keep rates a little bit higher for longer. Haven't we proven that these companies can handle that for at least a little bit? I think it's we went too far too fast, and now I'm getting close to thinking we're going too far back down again, and I want to start buying again.
I think you're right here, Aaron. I just think we're going to be in this choppy range here for a bit. I think the economic numbers are wishy-washy. They really have. Initial job between 192 versus 197. I mean, I just think everybody got too bullish 2 weeks ago, and now everybody's turning full-on bearish, and we're going back down to the lows, and we're retesting, and Dan Nathan's parading around on CNBC that, we're going back down to the lows. I think we just keep chopping up, and that's what I've been calling for. And I'm not sure if you've been listening, Aaron. I've been trying to just call for this sideways market where we're just going like this for the next month. And how do you make money in that market? You're fading moves. You're buying dips. You're shorting reps. You're selling into the reps. You're buying into the dips. You're just, contrarian market. It looks like it's breaking out. No, we're selling that. It looks like it's breaking down. No, we're buying that. That's the difference. When you're in a momentum market, new lows beget newer lows. When you're in a contrarian market, new lows equal back up to highs. That's just how we go. So I think we're in a contrarian market still. That's why on this, number here, which is wishy-washy, I don't think we just tank and give it all back today. Let's look at the evidence. We've got Nvidia blowing it away. Alibaba, which is a major, obviously stock over in China, it's got good earnings and it's trading up significantly too. Do we honestly think they can take the S&P red on this GDP number? I don't think so. And that's why I've been dipping and nibbling in and buying some of the indices on this pullback here that we're just experiencing right now. We're starting to come off the lows here now. So starting to work that trade. Obviously, you get the initial numbers and, things can happen very quickly. But, as of right now, it just feels like we're still just going to be in a choppy market.
Yeah, it's still the thing is with if you're stepping out on the long side here, right? I don't know whether when you're looking at your stocks and you're looking at yesterday's low, that's going to be quite each individual is different, but I don't know. I don't have a good place like to buy the dip here. It'd be closer to yesterday. It'd either be yesterday's closing price or yesterday's low because I just like right here I still kind of think we're in no man's land. And also to buy, I think I would, and it's different occasions, but I'd be more like right now, I'd be more willing to buy this if it made a new high on this session and it took out the previous day's high. I think you got some upside. And then I'm looking at the closing price. I think the best thing the bulls could do here is defend that pre-market low. Like never let it, hold that pre-market low, set the bid, set the bar above that, and then step up and move it higher. Do we have Tracy in the background yet?
We do. I see our guest hanging out backstage. Joel, what do you think? About time to bring Tracy on?
Sure. Yep. 8:37. We're a couple minutes late.
All right, let's go ahead and bring Tracy Reiniak, the senior equity strategist at Zacks Investment Research. Without further ado, let's give Tracy our special intro. Bring her on.
Hello, Tracy.
Hi. I don't think I've ever had this special intro before. Is that new? That's dramatic.
Yep, they little bells and whistles and to spruce things up a little bit. Now I know we were on last time and you had a Michigan shirt on and I wasn't here. Have you been on since then?
No.
I apologize. You wore a Michigan shirt and I wasn't there that day. So
but maybe that turned out to be the curse. Maybe I need to not wear it because it was not a good outcome.
Okay. Superstition, that's in the markets.
That's the last time I'm doing that.
All right, so give us some big data here. The overall data on S&P 500 companies, how many reported, what have you seen so far?
So through yesterday, so this does not include today's, like this morning's reports, we had 429 of the 500 in S&P 500 have reported for fourth quarter now. And taking a look, it's down 5.1. Our estimates and the analysts expected to be down 5.7 when the quarter actually is completed for that quarter. But, that's looking in the rear view mirror. So it is what it is. We all knew that, the earnings were going to come down in Q4. But looking at Q1, expected to be down again about, I think it was 8.5, maybe coming down in Q1 here. Yeah, 8.5. So, but those estimates keep going down because as the companies report, some of them are like, it's not going to be so great, or we're only going to give guidance for Q1 and nothing else because we have no idea. And so the analysts keep adjusting it. And
what if you took out energy?
Well, energy, the earnings have been much better. So that actually makes it worse. It's going to be down. Do I have it? Oh,
9.6.
Yeah, 9.6. Finance is one of the big drags in Q4, which is interesting. I think most people weren't thinking finance with the Fed raising so aggressively, the earnings would be, falling there a bit, but that's going to reverse here in 2023. But a lot of the banks had to put in reserves and get ready for possible losses, the pain that the Fed keeps talking about. So that always impacts the earnings when they got to put in the reserves. So we had some weakness there. Tech actually down 18% in the quarter. So we know, and that's not surprising either because that's where the layoffs and everything has been. So, look where the layoffs are, what industries those are in, and then you can basically match it up with what's happening on the earnings front in those industries because nobody that I know of is laying off in energy. Nobody.
So we had lower, earnings weren't that great for the most part. Guidance hasn't been that great. So expectations for Q1 aren't that great.
No.
And you had a 9% rally in the market in January. What makes sense of it for me, please?
Just coming off those lows, really. The new calendar year, we did see this in 2000, 2001. After that sell-off in 2000, people are like, oh, the worst is over. Let's get in. This January was the biggest January rally for the NASDAQ since 2001. The same kind of thing happened. That rally petered out and then, slid into April, basically. So I'm kind of expecting the same. I was listening to you guys talk about how we might be market bound here for a while. That could be true, but I don't think we're going to hold at these levels with what the market is now trading at. The S&P 500 is at 18.5 times for 2023. Those estimates keep coming down, but the market goes up. It's getting more expensive, not cheaper. And I've never really seen a big market rally coming out of a bear at 18 or 19 times on the S&P. So that's my problem with it. Holding.
Tracy, so I'm curious. I'm Aaron, by the way. Nice to meet you.
Hi.
So you mentioned the layoffs in tech, and we obviously, we talk a lot about, Amazon, Meta, Apple, all these big companies, and all of them were laying off a bunch of people, and everyone, I think that went a lot into everyone's sentiment, basically thinking, okay, we're doing mass layoffs, entering this recession, but then the labor numbers, the jobless claims and everything kept coming in good. Do you see the tech layoffs as like indicative for the overall economy or not necessarily?
No, not at all.
Why is that?
Because they just overhired. The boom was too big. They got, money sloshing around. Sure, we'll hire an extra 10 people in that division. Who cares if they're not doing anything? I think we all could kind of talk to some people at these companies who really weren't crushing it. And so now they're getting rid of some of that. But the other industries don't have this issue at all. There are still genuine shortages in many industries. Just look at what's happening in nursing. Even again, I mentioned energy. Energy can't get anybody. Like if you go on Baker Hughes's website and look at their jobs, they had something like 500 job openings just in the US alone. They are global, so there's more everywhere else. But the first job I looked at a couple of weeks ago, software engineer, because everybody wanted to go to Apple, Google, these places. Now they're being laid off of there. Some of the talent will be distributed, but there's plenty of industries where there's just those job openings. The baby boomers retiring at 10,000 a day now. And for years, the demographic guys have always been saying, like, we're going to be doomed when the baby boomers finally leave the workforce. And we were like, nah, look, it hasn't happened yet. But it does feel like it finally is. That a lot of them stuck around after the Great Recession because their stock portfolios got hit pretty bad. So they stayed in the workforce a little bit longer than they might have otherwise did. And now they're getting out. And we really don't have any solutions to how do we refill these jobs. And then we have some other areas like infrastructure. Nobody really knows how we're going to build all those bridges, really. We really don't have enough people on that end either. So yeah, I think it is much more limited to tech. It's going to be limited to the companies that were like the SPACs, the IPOs, those that didn't go public, but are, VC companies. I've heard some millings about here in Chicago about some of the startups, maybe doing another round of layoffs coming up soon because the money's drying up. And suddenly it does matter, if that person is actually doing anything that you're paying right there. So yeah, tech is going to be the hardest hit. But I do feel like a lot of that talent is going to rotate into these other areas that aren't getting hit as hard. Good for them. It's good for the economy. Suddenly agriculture, healthcare, energy, these other areas that weren't as glamorous as like true tech will get a lot of these people. And I think that's a little conundrum for the Fed, right? Because look at that jobless claim again, 192. That's insane. With all the layoffs we've heard about, they are either aren't filing or they are jettisoning into somewhere new, like fairly
Wow.
quickly. So
That's
yeah.
that's an interesting statistic. We're on the line with Tracy Raniak. She's a senior equity strategist at Zacks Investment Research. Just going back to the valuations with that January rally. I mean, it got us up to 18.5%, which is we know historically high. Zacks consensus is fallen to 215 from 242. Where in your opinion, do the earnings have to get to before you start doing some serious bottom picking?
Well, I'm a little more bearish than some others, and I
I
do
can
think it's
tell.
going to go under the 200 level
Wow.
before we actually, bottom out, because the Fed's going to have to go probably further than what everybody is assuming. I think it's interesting that basically last year, at the end of last year, there was one analyst, and I can't remember who it is, who was saying, oh, the Fed's going to go to 6. He was kind of like the outlier, and everyone's like, okay, you're kind of crazy. But now I'm hearing a lot more talk about possibly that the Fed is going to have to go to 6.
Oof.
And so that's going to, it's going to hit, and it's going to bring those valuations down. But, some of them, I don't know. There's still cheap areas. I'm the value stock strategist at
Give us
Zacks.
a couple. Give us a couple here.
Well, energy is still cheap.
Still okay. Still looking in the
People
oil
don't like
patch.
it. Energy does look, it's been holding up well while the WTI has come down. If WTI really does break down under the 70 level, and that is where the US, the SPR, they're supposed to be buying there. So it's supposed to put a floor under, but if it does break down under that, I feel the stocks are very weak here, and we could see a further, just bigger breakdown finally in the stocks. But I do think that'll be kind of the bottom in the energy, and it is a good buying opportunity because those earnings are coming down this year off WTI and natural gas coming down. But we don't know what's going to happen by summer. And even coming down off of last year's record year, they're still very attractive here and paying out to the shareholders the big dividends. And so I still in an energy bull, and I know most people hate it. I see
You have
someone on
a couple choices, a couple particular issues that you're looking at.
yeah, I do like. Last year I was big on the producers because they're unhedged. That's where you want to go if crude is over 100. It's not anymore. So the service side, that's really picking up. So I like all the big service guys. Baker Hughes, which is BKR, Schlumberger, SLB. Well, I guess they changed their name now to SLB to appear like less energy-ish, I guess. Halliburton, HAL. All three have great free cash flows. Shares have rallied, still fairly cheap, and they're just seeing the demand. They're drilling more. Guyana, Suriname are the two big areas. Middle East is picked up on capacity. North America, not so much, because our producers are like, we don't trust this rally, and we're not investing in the CapEx yet, but they will. And when they do, even bigger business. So it is one of the industries where earnings in energy are on the rise, are on the service side. So I do like the service. Some of the refiners aren't bad here. And some of the producers, if they come down a little bit more, they'll still be attractive. And I don't mind big oil, but they've had a big run. So it's not as cheap for me like an Exxon or a Chevron. But if we have this breakdown and those stocks do come back down a bit, then I would be a little more interested.
Tracy, something I'm curious about, do you think there's a possibility, maybe from retail traders, but maybe also from like institutional and the big guys, that there's really a lot more focus on some of these like value names going into 2023, just from people that have been like burned by big tech names over the past year, saying, okay, I don't want to get into, some high valuation company right now. I'd rather buy something with a low PE. Like, do you think that that's could potentially happen?
Well, that was supposed to be happening.
Okay.
At the end of last year, everyone's like, growth is dead. We have to buy value. And we have seen rallies in a lot of the value stocks. So United Rentals, they're still cheap. They're trading at 11 times. I think they're at all-time highs right now.
What's the symbol on that one?
URI.
That's what I'm going to guess. Okay.
And so they, huge beneficiaries of the infrastructure plan, and earnings on the rise there. So people have been piling into some of these types of value stocks. And I still think the rotation will continue into those, and even into, dare I say it, the banks. Who's talking about the
Ooh,
banks
okay.
ever? Why
All right.
would we? But we're starting to see some new things developing there. I have heard many people recently talking about savings accounts at the banks. That's very helpful for the banks. If I suddenly start putting some of the money I might have put into stocks or even bonds into just a high yield savings account, they'll make money off me doing that. So we are starting to see some of the earnings change on some of the banks, but we need the Fed to keep rates higher for longer for the banks to really pick up momentum. But they've been hated for so long, even longer than energy, I want to say, that some of the banks could see something here.
Okay. What about any expensive stocks out there? Any that you're just like, oh my gosh, I can't believe this thing's trading up here. Any expensive stocks you want to mention?
There's many of those, and that's one of the reasons I'm cautious here. These are companies I like. They have great fundamentals, but like a Ferrari, race is the ticker.
Yep. That one.
Great. I love Ferrari, but it's just too pricey here. It's trading over 40 times. And with the Fed still raising, like I just can't stomach it at that level. And Elf Beauty, again, another great fundamental story. The beauty side is hot. Those shares taking off. They have beaten raise 2 quarters in a row now. So I love it. But it's over 50 times with that one. That's not the sign of a bottom there, I don't think.
What about Ulta? What about Ulta, Tracy?
Ulta is expensive, not as bad as Elf. We haven't got their earnings in yet, but because beauty is strong. But I've owned Ulta for almost 10 years in my own portfolio.
Nice.
I'm not at
Great call. Great call. It's been been a killer.
I bought in when the last CEO decided to buy some shares, Mary Dillon, 2014.
The old insider buy trick.
Yeah.
Okay.
So, I still like Ulta, and I do expect this quarter to be good. I think they report next week, maybe it is. But it is a little pricey here for me as well with what's going on. But I don't think the consumer is going to pull back that much on the beauty side, even in a recession. It's just something that there's a lot of ways which Elf Beauty is a beneficiary of because it's on the lower end of the price point. So I can move down. I can go from the higher prestige cosmetic down to the drugstore level point, but I'm still going to go to Ulta to buy it.
Okay. All right. We're going up against the clock here. We've been on the line, Tracy Yarniak, Senior Equity Strategist, Sachs Investment Research. Talking a little bit cautious on the market here, Tracy. I really appreciate you coming on today, and talk to you again soon. And we need to beat Rutgers tonight on the road, and that is going to be a tough task. So thanks again, Tracy.
Okay. Have a good one.
Thank you, Tracy.
All right, sustained bid in the S&Ps. We did pull back mid-range on the session. If you took advantage of that 14 and a quarter area, you're looking okay here. A couple points, not blasting out of here. But what is blasting is Nvidia. It said, see ya at 230. The bulls are absolutely relentless in this one. You have pre-market high. We are trading at highs. I would note that one, man. I would just jot down that pre-market high, and I'd say, hey, just keep on going, keep moving that stop up. But what a relentless bid. Almost over 4 million shares have traded in Nvidia, Dennis.
And again, all I do as a trader when I'm trading the indices is I'm looking under the hood all the time. And you look and you're like, well, why are you buying a pullback on the GDP number? I'm like, well,
Nvidia is not going down.
Nvidia is not going down. You think Nvidia is going to be up 12%? And they're bringing this S&P down to the red. I mean, that's why I'm inclined to buy the dip there. So, and again, I'm getting rewarded for it now. We're not too far off from where I was buying. A little bit higher though.
It's just such a different kind of rally because you definitely have some people that kind of bought the dip yesterday, right? That they No great levels or anything, but they got a lead in there was the last 8-9 minutes is where you had the rally, and they're like, oh, you could feel the offers here. I still think getting through that yesterday's high will be the next burst on the upside. Aaron, what else do we have to cover in today's show? We got 5 minutes left. We can always go to ticker time, but
if anyone's got tickers in the chat, I mean, we never got to Etsy or eBay. I mean, those are a little smaller. Reported yesterday. And again, I just want to also make a comment. I think it's so funny right now. We're seeing all these upgrades roll in for Nvidia. I mean, I went to journalism school, and I think I could be an analyst right now for one of these banks. All I got to do is wait for a stock to go up, and then I upgrade it, or I wait for it to go down 20%, and then I downgrade it. I mean, what do these guys do?
Well, I mean, a lot, and some of them do some good research, and it is a tough job. I mean, you're always under the scrutiny of us and everyone else here. But yeah, there is a lot of analysts that simply adjust their price targets to where the stock is currently trading because they don't want to look bad. They're upgrading it after the fact. I mean, I call those analysts the lemmings. Some of them, we have some contrarian and obviously some great analysts. We bring in like Michael Pachter, who, sticks to his guns. He doesn't, think about how much heat he took on Netflix all those years. Other analysts are changing their price targets. He doesn't do it. He's like, no, I still don't believe in it, even though I'm way off here. And he admits when he's wrong too. So, we can't just blanket them all and put them all but in the same group, but a lot of them just chase price. And, there's trades off that too, Aaron, like we talk about that. And Kramer even talks about it. You get the stock to have the big move. Well, upgrades are coming tomorrow, probably going to follow through again. So it's just the type of market that we have that, the analysts chase price, and that's not even the top one. It's always been the case. I mean, analysts have always chased price.
And I'm kidding around. Obviously, I don't think I could actually, they do a lot of research and stuff. And I read a lot of the research reports, and they're great info. I mean, especially some of the major, if you read some of the reports from like JP Morgan, Morgan Stanley, like those are good reports and good information to have. It's just funny when you see the price targets moving as soon as the stocks move. And I also think it's one, it'll be one of those things where one analyst changes the price target and then the next one will. Yep. And then the domino starts falling. So it's
it's called the ACP theory, and we talked about this a lot. And I think we named that. This was a while ago, back when Spencer was on the show. There was a point with McDonald's. It just was. I wish I could find it in Pro. There was just a like maybe 5 analysts over the course of like 2 weeks, and it just kept on marching the stock up higher and higher. So we got
AT&T too. We had something where there was a downgrade, another downgrade, another downgrade, and it was like forever. It felt like
one that sticks out to me is during like the COVID markets when everything was running. Morgan Stanley, who I like some big bank, when one of the big banks that has like a good reputation, they put out like a crazy price target on Snapchat. It was like $120 or something, and just like looking back on it, I'm like, how could anyone look at Snapchat? I don't know. I guess the times were different. Everyone, the interest rates were at 0 and everyone was buying everything. So maybe that was the realistic price target at the time. But any other stocks, anything we should check out in the last 2 minutes?
Let's do we do Etsy?
Etsy. You go back to Etsy real quick. So we got let me read the numbers real quick. Stock is trading. Let's see. All right. So revenue. Q1 revenue at I'm seeing a really wide range here in Pro. It says 600 million to 640 versus 620 million estimate. EPS misses the 80-cent estimate, came in at 77 cents. Sales, okay, there we go. Sales beat 807 million versus 750 million. So it looks like a decent report. Not great because you had that slight miss on EPS, but the sales came in higher than expected. How's the stock looking, Joel?
Now it's trading up. Wow, this thing got over 140. Holy mackerel, 141 this thing got to. But we've had a little bit of a reset. When I see a stock like this, when I see a move down, I see a gap fill, I'm like, can they get back half of this move? So I'll give you a target here, a potential target. Nothing on the dailies, but 137.50. If you're looking for more on this one ahead of the pre-market high. And then if you get the dailies are nice. Look at that. You had a daily high at 114.16 on the 16th, and they took it through it in the after hours to 141, but that didn't hold. Triple D, any comments on Etsy, or is there another stock you'd like?
Citron has been given this one heat here for the last week or so. So, obviously Andrew left. We've had him on the show before too. Does he comes out with he does some great research over there. I mean, obviously, there's skepticism toward Andrew's research, but he's right a lot of times too. And he's really been not a fan of Etsy here. I'm not going to fight Andrew on this. The stock's been coming up. I'm more of a seller into the rally. I think you get to the 140. I think got major resistance up there. And just one piece of housekeeping before going here. I just want to wish my father a very happy birthday. He's 72 here today. So happy birthday, Dad.
Woo!
Yeah. So
big fan of the show.
He listens faithfully all the time. He doesn't trade stocks, but he listens faithfully. So happy birthday, Dad.
And your mom is a very good analyst of the show. She gives some of the best critiques. So, all right, I'm going to sign out here at 9:01. Good call by Triple D on buying the dip there. We just about mid-range on the session, and just reiterating that that yesterday's high 25 even, pre-market high 24.50. I got nothing. I got all 1 stars, Dennis. If we get through there, I got all 1 stars, and that's going to be up to Monday's intraday high at 56.25, and that just happened to be 2 ticks from Friday in the weekly low. So the bulls got some heavy lifting to do to get up to that area. Another 30 handles that would fit in with the average daily range, and I say, Aaron, pretty good job today, working out of the world headquarters and giving us a good substitute for Mitch today. So happy birthday.
Any feedback always appreciated. So
okay, all right, we'll check in with you guys
Aaron.
later on. Everyone have a good day.
Happy birthday to Mr. Dick. Yep. All right, everyone. We'll be live on live trading here in a few minutes. We'll be back on pre-market prep tomorrow morning. Do not go anywhere. Stick around for live trading.